Food cost is one of the major expenses in running a restaurant. So it's essential to have a clear understanding of how to calculate it accurately. First, understand why food cost is important. If you know the food cost, you can set prices that cover these costs and include a desired profit margin. You can predict how much you will need to spend on food based on historical data and future sales projections. Food cost analysis can help you identify which menu items are the most and least profitable, so you can promote high margin items, rework on your recipe, or removing low margin items. Also, it helps identify and control those areas where food is being wasted. Regular monitoring of food costs encourages better practices among staff and helps identify and address inefficiencies, ultimately supporting the long-term sustainability of the business. Now let's check how we can calculate food cost. There are two types of food cost: plate cost and period cost. Plate cost, also known as food item cost, refers to the raw material cost associated with preparing a single menu item. It is calculated by dividing the total cost of preparing the item by its selling price. To express this in percentage, multiply the result by 100. Let's take an example of a burger. If it costs 5 rupees to make a burger and you sell it for 20 rupees, then the food cost percentage is 5 by 20 multiplied by 100. So the food cost percentage for this burger is 25%. Now, calculating the food cost for each item in the menu can be tedious. Restaurants often calculate food cost periodically, such as in a week, month, or in 6 months. Typically, food cost is calculated on monthly basis in most of the restaurants. So we will use a monthly example to explain this calculation. Let's take March month. On 1st of March, check the inventory or stock. In stock, let's suppose you have material worth 50,000 rupees. This is our opening inventory for this month. Now check all the purchases that you have done in the entire month. Let's suppose you made purchases of 25,000 rupees. Now, on the last day of month, take stock once again, and you found there is material worth 40,000 in the store. This is our closing inventory of the month. So now to calculate the whole month consumption or usage, just add the opening inventory and purchases, and then subtract the closing inventory. Closing inventory becomes the opening inventory of next month. So that's why we subtract it from this month usage. Now we get this month usage, which is of 35,000 rupees. So now to calculate the food percentage of the entire month, divide this usage with total sales of the restaurant in that particular month. Assume March month sales is of 1 lakh rupees. So divide 35,000 by 1 lakh, and as we are calculating food cost percentage, so multiply it by 100. So for the entire month, our food cost percentage is 35%. Now if you look closely, both formulas are same. In plate or individual food cost, we took value of ingredients used for single burger and sales price of that same item. While in this monthly, we take whole month ingredients usage and total sales of restaurants during entire month. We can also write this formula like this. Now make sure you are comparing the correct category purchase and inventory to the correct category sales. Now, what should be my food cost? The ideal food cost percentage can vary depending on type of restaurant, location and other factors. Generally, a food cost percentage between 25 to 35% is considered good. Well guys, that's all for the video. I hope you like it. If you do, hit a like button. For any doubts or suggestions, comment down below. Also, don't forget to subscribe to Hospitality Broadcast. Stay tuned.